Get ready because the pace of innovation isn't just fast, it's accelerating. You're watching Qualcomm Pulse, and this is your essential download of the breakthroughs that are shaping tomorrow. We've got massive market predictions, a supercomputer power-up, and big moves on Wall Street. Don't miss a second. First up, a company is on the verge of a monumental valuation, set to join the elite ranks of tech giants. Can it really hit $3 trillion before 2029? We dive in. Then, a seismic shift in supercomputing as Japan's next-generation powerhouse gets a major AI boost. What does this mean for the future of high-performance computing? We've got the details. Plus, a top analyst is making waves with a significant price target increase for a major chip maker, right ahead of their earnings report. Is this the signal for another surge? And finally, the market buzzes as a key economic announcement looms, alongside critical earnings for a titan of the tech industry. It's all happening right now, and you're getting it first on Qualcomm Pulse. Stick around, you won't want to miss this. Subscribe and hit the bell. A $1 trillion leap awaits. Could a tech giant become the next $3 trillion valuation? This company is poised for monumental growth, potentially joining the ranks of tech titans like Nvidia, Microsoft, and Apple. With a current market cap hovering around $1.9 trillion, the question on everyone's mind is whether Meta platforms can achieve this staggering valuation by 2029. The signs are certainly pointing towards a significant upward trajectory. Meta Platforms, the parent company behind Facebook, Instagram, and WhatsApp, has been making substantial investments in artificial intelligence, a sector that is rapidly transforming industries worldwide. These investments span cutting-edge data center infrastructure and highly competitive compensation packages for top AI talent, signaling a clear commitment to leading the AI revolution. The impact of AI is already evident in Meta's core business. While advertising remains its primary revenue driver, AI-powered algorithms have significantly enhanced user engagement across its platforms. CEO Mark Zuckerberg reported that during the second quarter, these improved algorithms led to a 5% increase in time spent on Facebook and a 6% rise on Instagram. This deeper engagement makes Meta's ecosystem even more attractive to advertisers, and the company is actively developing tools to help businesses optimize their advertising campaigns, from audience targeting to content generation, with early successes already being reported. In the second quarter alone, AI-driven ad improvements resulted in a 5% increase in ad conversions on Instagram and a 3% increase on Facebook. Beyond its current advertising success, Meta is also charting a course into new technological frontiers. The company is betting big on AI glasses, envisioning them as the primary interface for integrating AI into our daily lives. With over 1 billion people already wearing glasses, the potential market is immense, provided Meta's vision for augmented reality glasses materializes. Even if this ambitious venture doesn't fully pan out, the strength of Meta's core advertising business is expected to remain robust over the next 5 years. To reach a $3 trillion market capitalization within the next 4 years, Meta would need to achieve a compound annual growth rate of approximately 12.1%. This is a growth rate well within the company's historical performance capabilities since its 2012 IPO, suggesting the target is attainable. However, the path forward is not without its challenges. The competitive landscape in AI is fierce, necessitating continuous heavy investment in talent and infrastructure. There's a risk that these substantial expenditures may not yield the expected returns, potentially impacting the company's profitability. Furthermore, Meta's business is sensitive to macroeconomic conditions. Economic downturns can lead to reduced advertising spending, which could slow the company's growth. Despite these potential headwinds, analysts remain optimistic about Meta's long-term prospects. The company has a proven track record of navigating economic cycles and has demonstrated resilience by rebounding from periods of increased expenses and slowing growth. Its massive user base, strong network effects, and diverse growth opportunities in advertising, AI, messaging, and the metaverse position it as a compelling investment for the long haul, regardless of whether it hits the $3 trillion mark by 2029. Keep your eyes on this incredible growth story. Next, we're diving into the future of supercomputing and how AI is set to redefine its capabilities. Supercomputing's AI awakening. Japan is making a bold statement in the global pursuit of technological independence, particularly in the realm of high-performance computing and cloud infrastructure. A key initiative in this endeavor is the development of indigenous processor designs, exemplified by Fujitsu's Monaka CPU. This strategic move aims to reduce reliance on foreign chip suppliers, fostering domestic innovation and capability. While the Monaka CPU is designed for mainstream applications, the question of what would power the heavy floating-point computations for advanced simulations and AI models in Japan's next-generation supercomputer, codenamed FugakuNext, remained open. However, the answer is now clear. Nvidia's cutting-edge GPUs will be the driving force behind FugakuNext's immense computational power. Expected to be operational by 2030, this supercomputer is set to be a monumental leap forward in high-performance computing. Nvidia's roadmap suggests that its Feynman Ultra GPU, potentially shipping in 2029, will be a cornerstone of the FugakuNext system. This GPU is anticipated to deliver unprecedented performance, with estimates suggesting it could reach around 400 petaflops at FP4 compute per socket. To put this into perspective, the current Fugaku supercomputer, powered by the A64FX processor, supports FP64, FP32, and FP16 math. In its normal mode, it achieved a peak theoretical performance of 1.95 exaflops at FP16 precision, with a boost mode pushing it to 2.15 exaflops. FugakuNext, leveraging Nvidia's future GPUs with advanced mixed precision capabilities like FP8 and sparsity support, aims to exceed 600 exaflops of peak aggregate performance. This represents a staggering 300-fold increase in AI performance compared to Fugaku. The architecture of FugakuNext is designed for extreme scale and efficiency. Each node will feature two Fujitsu Monaka X CPUs, which will be equipped with NVLink ports to seamlessly connect with NVIDIA's NV switch technology. This integration allows for shared memory access between the CPUs and the GPUs, a critical feature for high-performance computing workloads. The Monaka CPUs themselves are marvels of engineering, utilizing 2-nanometer processes and incorporating 3D transistor technology and chip stacking. They are designed for ultra-low voltage operation, contributing to an exceptional energy profile. Furthermore, Monaka includes specialized accelerators for virtual machines, enhancing security through unique encryption keys for each VM. RIKEN, Fujitsu, and NVIDIA are collaborating to make FugakuNext a zettascale system, targeting 1,200 exaflops in sparse FP4 performance. At FP64 precision, the system is expected to deliver over 2.6 exaflops of aggregate peak compute, a 6-fold increase over the current Fugaku system. This enhanced capability will significantly accelerate scientific simulations and AI model training. The system's design also incorporates advanced memory bandwidth, aiming for over 800 PB/s across the GPU complex. The node configuration suggests over 13,600 NVIDIA GPUs will be integrated into the system, each potentially offering substantial memory bandwidth to support these demanding computations. This partnership underscores Japan's strategic vision for technological self-reliance and its commitment to pushing the boundaries of scientific discovery through advanced computing. By integrating NVIDIA's leading-edge GPU technology with its own innovative CPU designs, Japan is building a supercomputing powerhouse capable of tackling the most complex challenges in science and AI. This collaboration is set to redefine the limits of what's possible in high-performance computing. Now, let's shift our focus to Wall Street and see what analysts are saying about the semiconductor giants. Analysts bullish on Nvidia ahead of earnings. As the semiconductor industry continues its rapid ascent, fueled by the insatiable demand for AI-powered solutions, Wall Street analysts are closely watching key players. Nvidia, NVDA, a frontrunner in this space, is garnering significant attention, with several analysts raising their price targets ahead of the company's second quarter fiscal year 2026 earnings report. Among them, Mark Lipacis, a highly rated analyst from Evercore, has made a notable adjustment, increasing his price target for Nvidia stock from $190 to $214, while maintaining a buy rating. This optimistic outlook is largely attributed to what Lipacis describes as Nvidia's attractive valuation. Nvidia's stock performance year-to-date has been impressive, with gains exceeding 32%. This surge is a direct reflection of the robust demand for its graphics processing units, GPUs, which are critical components for AI development and deployment. Lipacis highlights that Nvidia's stock is currently trading at a forward 12-month price-to-earnings (PE) ratio of 33x. He notes that this is below the company's own 8-year median PE ratio of 36x. Furthermore, its PE multiple is closely aligned with those of competitors like Advanced Micro Devices, AMD at 31x, and Broadcom, AVGO, at 37x, suggesting that the stock is not overvalued given its growth prospects. Lipacis projects Nvidia's earnings per share, EPS, to grow by an impressive 48% in 2025 and 39% in 2026, resulting in a price-to-earnings growth, PEG, ratio that remains well below parity, reinforcing its attractiveness as an investment. A key point of discussion among investors has been Nvidia's increasing weighting in the S&P 500 index, which has approached 14%. While some express concern about the sustainability of such a high weighting due to a lack of historical precedent, Lipacis draws a parallel to the PC and networking ecosystems of companies like Intel, Microsoft, Dell, and Cisco, which collectively achieved a 14% weighting at their peak. He argues that Nvidia, with its vertically integrated ecosystem encompassing chips, software, hardware, and networking, presents a similar, if not stronger, case for a significant market representation. This analogy suggests that Nvidia's dominant position and comprehensive offerings justify its substantial market influence. Lipacis's strong track record, ranking among the top analysts on platforms like TipRanks, adds further weight to his assessment. With a success rate of 66% and an average annual return of 24.6%, his recommendations are closely watched by the investment community. Adding to the positive sentiment, Wedbush analyst Matt Bryson also raised his price target for Nvidia stock leading up to the Q2 FY26 earnings announcement. Bryson reaffirmed his buy rating and increased his target from $175 to $210, citing strong demand from hyperscale AI customers as a primary driver. Despite ongoing concerns about sales of specific chips to China, the overall sentiment on Wall Street remains overwhelmingly bullish. The consensus rating for Nvidia stock is a strong buy, backed by 35 buy recommendations, 3 hold ratings, and only 1 sell. Analysts anticipate Nvidia to report a year-over-year EPS growth of 48% for Q2 FY26, reaching $1.01, with revenues projected to jump approximately 53% to $45.9 billion. The average analyst price target of $198.57 indicates a potential upside of 11.5% from current trading levels, signaling continued confidence in the company's growth trajectory. Nvidia's performance continues to be a major talking point in the tech world. Coming up, we'll look at the broader market sentiment as key economic indicators and earnings reports are set to influence the trading week. Market awaits key economic signals and tech earnings. As the trading week draws to a close, market participants are keenly awaiting a confluence of significant economic data and corporate earnings reports that are expected to shape market sentiment and direction. The upcoming week holds particular importance, with a pivotal speech from Federal Reserve Chair Jerome Powell and the highly anticipated earnings release from Nvidia, a titan of the semiconductor industry, on the horizon. The anticipation surrounding Federal Reserve Chair Jerome Powell's upcoming speech is palpable. Investors and economists will be scrutinizing his remarks for any new insights into the Federal Reserve's monetary policy stance, particularly concerning inflation and interest rates. Any indication of future rate hikes or cuts could have a profound impact on market dynamics, influencing everything from stock valuations to bond yields. The broader economic landscape, characterized by persistent inflation concerns and fluctuating growth indicators, makes Powell's commentary a critical data point for understanding the trajectory of the U.S. economy. Adding to the week's significance is Nvidia's second quarter earnings report. As a bellwether for the technology sector and a key player in the booming artificial intelligence market, Nvidia's financial performance is closely watched. The company's ability to meet or exceed earnings expectations, coupled with its forward guidance, will likely have a ripple effect across the broader market. Investors will be looking for continued strength in demand for Nvidia's AI chips, as well as any updates on its supply chain and competitive positioning. Positive results could further bolster investor confidence in the tech sector, while any signs of a slowdown could temper enthusiasm. This dual focus on macroeconomic policy and corporate performance underscores the interconnectedness of economic indicators and market movements. The anticipation of these key events has created a sense of cautious optimism, with many market observers eager to see how these factors will play out. The potential for significant market shifts highlights the importance of staying informed and adaptable in the current economic climate. The ability of companies like Nvidia to navigate the evolving technological landscape, combined with the Federal Reserve's management of economic conditions, will be crucial determinants of market performance in the coming weeks and months. These upcoming events are crucial for understanding the market's next move. That's all the top stories for today on Qualcomm Pulse. Stay tuned for our lightning recap, and don't forget to subscribe. Meta Platforms is poised for massive growth, potentially hitting $3 trillion by 2029. Japan's FugakuNext supercomputer is getting a massive AI upgrade with Nvidia GPUs. Wall Street analysts are boosting Nvidia's stock price target ahead of earnings, and all eyes are on Powell's speech and Nvidia's earnings to guide the market. Don't miss out on the next wave of innovation. Like this video, subscribe to Qualcomm Pulse, hit that notification bell, and share your thoughts in the comments below. Follow us on all social platforms for more updates.